Recession, war, tariffs, orange man doing bad things, all this negativity. What does this mean for the Bitcoin price? And thereby potentially the Sol price or the Sui price, maybe even the Ethereum price if they get lucky. Let's dive into this, but we're going to dive into it with looking at the viewpoints from Raoul, who is probably the most famous of the three people I'm going to cover, Benjamin Cowen from Into the Cryptoverse, and Jason Pizzino. And then at the end, I'm going to tie up my ideals or my ideas from this, giving what I think, given that I am not as experienced as these people in terms of trading or anything like that, even slightly. But I do have my own viewpoints, and I think that kind of balance between them. So if you don't know who Raoul is, worth following for sure. Founder of Real Vision, and I've spoken about him quite a few times. At the SUI conference, he did like a great video. I've mentioned it a few times for you to watch it. Basically, his thesis is simple. Global M2 has a lead on Bitcoin, and Bitcoin follows this. Global M2 is all the money out there that's essentially liquid. It can be like stocks, money in banks, treasuries, all that kind of stuff. It's not your houses. It's things that can be converted to cash. And this goes up with money printing. It goes up with just the nature of euphoria and markets putting up the prices of stocks and such. He believes there's a 10-week lead on it, and that Bitcoin just lags. It just lags, and then it sees it and it goes up. So we know the data beforehand, and we take that into account. We see the M2 go down. We're expecting Bitcoin to go down. We see M2 go up, it goes up. Has it always worked? No. We'll cover that shortly as well. Now, his co-founder, Julian, he prefers a 12-week. So 10 weeks is 70 days, 12 weeks for whatever reason, it's been settled as 85 days, 84, 85 days. He likes that. We're going to go with a 12-week because it seems to be what we're just going with and we like it. He also talks about the ISM, which relates to manufacturing, and we'll keep it quite simple here. Right now it's 48-ish, and that's low. This is from March, I think, so it's probably up. This is from May, sorry. So this is pretty current. It's kind of low. It's low because there's tariffs and stuff bringing stuff in, but Raoul does think this will pick up and it will go over 60. And at over 60, the Bitcoin price will be potentially 400,000. We'll cover that shortly as well. You can see it does do this in these cycles. And this is all when your Bitcoin price goes really, really high. With the ISM really high, you got your Bitcoin implied ISM pricing. So manufacturing in the US is very, very relevant. Now, the reason why this video exists is to give you perspective. We've put in, watched a whole lot of videos, asked different questions, and had a few different meetings with my researchers and I to try and work out, how do we extract value from these people in order to work out what goes on? Because they're not all going to be right. Probably part of what their thesis is going to be right, and we want to be far more right than wrong this cycle. The cycle maybe until the end of this year, or more likely Q1, Q2 next year to run. So we want to profit from it. But Raoul mentions this is March when things are difficult. It will pass. It will pass. When Bitcoin's $80,000, it passed. We will still have this again later, but we'll talk on that in a second. How high can Bitcoin go? This is probably the most craziest thing I've seen, but it could be right. And Raoul is very, very sensible in that he doesn't want to go and publicly say all of these viewpoints because of that fear of being wrong. But he feels that crypto is the most worthwhile asset in order to build wealth. It has outperformed everything. It will continue to outperform everything. But as you go on, cycle after cycle, the expectation of returns, it gets less and less, right? It's just the nature of things. Bitcoin, if you bought in 2017, you could get it at $2,000. Now, after this dip in the next cycle, who knows? Maybe it goes down to $80,000 or $70,000. It doesn't have the same ROI factor. And his viewpoint is, if you have a look at the deviation from this point here, you could expect, looking at the previous price, this is cost of Bitcoin, it deviated to the point which was 2 standard deviations. And even if it was 1 standard deviation, Bitcoin would hit $400,000. If it was 2, which he's not expecting, it'd be $800,000. I definitely don't think it'd be 800. But he said those that are thinking it's 150 to 250, like, or more commonly, people think it's going to max out at 150 to 200. Those people are wrong, and they've been burnt by the fact that FTX just destroyed half of people in crypto. Celsius destroyed new retail that were too unskilled for DeFi. I use Celsius as well. BlockFi destroyed another. Luna went and just destroyed VCs. So the extraction that happened on the previous cycle has scarred people, and he thinks they're not pricing in the potential. He also talks about the banana zone. Imagine a banana. I don't have any bananas here, but banana, right? Simple banana. It's kind of like this, and then kaboom, and it's just straight up. And this is what happens in the banana zone. This is very important. What we're looking at is in each of the cycles, you have this period where this very brief period where things just go euphoric. And I remember in 2017 is my first kind of cycle. You know, XRP, I know what it was, like 20 cents, 30 cents, and it goes to $3. Like, why? Just because this euphoria. People thought like it'll always go up. And then your second cycle, the same thing happens, but people realize it won't always go up, but they think it won't go that bad. I didn't think Sol was going to go down to 20 something dollars and then down to $8. No, very few people thought that. ETH did far better, but then didn't rebound. The thing is, in these banana zones, you have basically 3 times when you've got a 35% correction on Bitcoin and potentially ETH, although ETH is not really doing well this cycle. So we'll just kind of speak on Bitcoin's sake. And this happened. This happened 105, 106, whatever it was, down to 76, something like that, $1,000. And the altcoins will do worse. So Sui was like near $6. It went down to $2 something. Sol did even worse than that. It was max extract value at 290. Probably shouldn't have been at 290. Then it fell all the way down to like 95-ish. Shouldn't have fallen to 95, but that was the nature of just some max extraction happening. And we're here. This is we're not at a point where people should be thinking, oh, a top is in. But if you look at Twitter, or my Twitter, the number of people that called for tops and then they got out of the market. This also was true of Ansem, who went and sold around 250, 240, around that, sold all of his soul, and then just exited. Gumshoe, I know, re-entered the market very recently. But he was, hoping that it would have another leg down. A lot of people were like this. And yet we're at this very first stage, and we've just experienced our first correction. And we still have phase 2 and phase 3 to go, which literally does mean it is possible that this is not financial advice, never will be. Solana hits $1,000. Now let's have a look at the charts though. So we can see in more detail. You can see this small issue here. This is for the current cycle. But what about the previous cycles? Because this is when we're going to talk about Ben Cowen and his theory. This is what happened in the previous cycle. M2 grew and grew and grew, and yes, we could see this happen. And then we get a top here, and then it comes on down. But why? Why did we dip so hard right here with only a small thing? Well, you could say that this is just part of the banana zone doing its thing. You have retracements. You can't go up like crazy and then not have retracements. We can explain this from here down to here, just due to the nature of the banana zone having volatility. And then we come up, M2's gone higher, and we go slightly higher, right? And then, why did all this happen? Why did this happen so hard? Why did why was the top here and why wasn't the top here? Why not? And I'm going to give a theory, and then we'll talk about Ben Cowen's theory shortly. But my theory is these are young, new markets, and you use this as a guide, and you will take profits. But there's going to be a time when the big whales will decide, I can short this, and I will just destroy people. And that is what will happen. So you probably want to take profits, not financial advice, before things get too euphoric. And we'll cover that at the very, very end. But also, there was this period when it bottomed here, yet it didn't bottom here, it bottomed earlier. And you'd expect the bottoms to kind of line up. This bottom related to FTX. FTX going bust was otherwise, that probably would have stayed like that. So this does actually explain it pretty well. And thus far, I'm backing Raoul's thesis. However, if you have a look in the previous cycle, when it was far more premature, it didn't line up perfectly either. But once again, I think you can see the indicator. When markets move, you also have to look at this indicator in relation to the S&P 500. When this moves, we're pretty close to the top, and this period here probably went a little bit too insane. And then it was vicious, a little bit of a reclaim, and then boom, like down it went. And this was pretty close to the bottom. So I'm accepting it. So kind of zooming out for the last few cycles, you can see it's not a perfect correlation, but it's getting more and more accurate at this stage. This is potentially what I see. This looks more and more accurate, and I guess as more people come into Bitcoin, as the markets are more understood, this could be the relevant thing. Now, Benjamin Cowen, he disagrees with this completely, and I'm not as familiar with his stuff, but we've still gone and put in a decent amount of research into what he's saying, because we're trying to be profitable, as we always should be. And he believes, and we can see this here, in the last 3 Bitcoin market cycles, Bitcoin topped between 18 to 30 weeks before that money supply indicator topped. Now, once again, we have to ignore the first cycle, because I know so few people that were in it, and like TradingView, we just got to ignore it. Nothing would have been as good as then. And I don't think people would have even really known about M2 properly, not on a retail level. This, though, yes, he is accurate. There is there's a difference here, between a significant difference, and even last cycle, there's a significant difference. But his point is a strange one. It's one that I don't agree with, but I'll give it to you anyway, because he's knowledgeable and he could be right. If you assume that Bitcoin leads liquidity rather than lags it, you can actually match Bitcoin's 2021 top with liquidity and also find an equally convincing correlation today. So he has it so that it's completely different. I'll show you in the next photos. But so with this one, what he's suggesting is, if you look at it here, yeah, you get these pullbacks still, but the actual top lines up, and then there's this deviation, which is, FTX, kind of ignore that. I don't know, this was a deviation, it was just deviation, and then relatively accurate. But what he's calling here is that Bitcoin actually leads M2 global money supply. So in other words, the whales of the world control the M2 money supply. And it doesn't make sense in my mind, but it makes sense in his. So this is a day offset of 142, meaning that he thinks what the Bitcoin price will do is, we know that Bitcoin price did go down, so M2 will drop. And then he's literally thinking Bitcoin is the thing that kind of shows what M2 is going to do. Because his viewpoint is, markets are future facing. They price things in. It's a little bit wild, but it's one to consider. 142 days. Right now, we're up here. Bitcoin price came down. M2 will come down. M2 comes down. Then maybe the stock market reacts to that. And then things go lower. And then maybe Bitcoin goes lower in the temporarily. Who really knows? But his biggest theory that's makes perfect sense, or a lot of sense, is this. The M2 supply, of course it's gone up, because the strength of the US dollar is being pushed down. The dollar was too strong, is what Trump's administration said. That means you want a weaker dollar. You want more tourism, you want more trade with your country. And if people can buy in a weaker dollar, it's bad for your citizens in a sense, but it's also good because it stimulates their economy. So this is what happened. The strength of the dollar weakened, and now it's starting to pick up. So the reason why M2 grows at this point is because M2 is all of the money in the world denominated in US dollars. And so what this means is, if you're in Portugal and you've got a debt, 80% of all the debt is in US dollars, and you'll go have a company debt in US dollar, and to pay off the interest on that, to finance that debt, it's cheaper for you when the dollar is weak. So this is a beneficial thing. But also, if you're converting euros into USD, like a couple of breakpoints ago, it was parity. It was €1, 1 USD. Now it's nowhere near parity. I don't know what it is, like 10%, 15%, something like that, of a difference. Meaning, of course, M2 supply is going to increase. That's what that means. Now, Ben Cowen has gone and he's mapped out what M2 is going to do based on the fact that Bitcoin has done this. So what he sees is going to happen is the strength in the dollar is going to increase before decreasing, because there's not enough money printing, or not public money printing. Maybe there's been some money printing in China, but it hasn't happened yet. And he has a very good theory, which we'll go into in a second. Now, Ben Cowen has this viewpoint here, and that is that basically total 3, which is all the crypto market cap minus Bitcoin and Ethereum, so taking away the two biggest, and the USD value, divide that by Bitcoin in the USD value, it gives you this chart here. And then what we have is ITC net liquidity, which is like all the money in banks, like kind of like M2, but it's just money in banks. So what we basically have is altcoins divided by their BTC pairs. And when we've got this is why he always talks about Bitcoin dominance, Bitcoin being better and better and better. Now, he expects the alt BTC pairs to bottom in the next 109 days, as per previous theses. And when this actually happens, what he expects is that it will come down and it will bounce off this trend line, and then it'll come up, which will mark altcoin season, or it will come all the way down to like this support. If it comes down all the way to the support, like your big altcoins are going to bleed heavily. Now, that doesn't mean that Sui or Solana, they could outperform. They definitely could outperform. What it does mean, however, is that his theory is altcoins in general will bleed versus Bitcoin. They may still increase in US dollar term, but Bitcoin will go up and be more valuable. So let me give you a little bit of TLDR. I've got a couple of notes here. This is relevant. Ben's thesis: Bitcoin leads M2 money supply. Since Bitcoin leads M2 and Bitcoin went down from December 17th, 2024 to April 9th, 2025, M2 should start to go down and bottom after 109 days. M2 money supply starts going down now as the DXY should start to go up, the strength of the US dollar. Alt Bitcoin pairs will go down, so your altcoins will go down, even though alt USD pairs, they can go up. So, Sol can go higher, Sui can go higher, but Bitcoin overall would be more valuable than holding a whole lot of random altcoins. Alt Bitcoin pairs will bottom 109 days from now and bottom around August end or September start. That would be the start of the actual altcoin season. When altcoin season starts, I didn't mention it previously, but it would be because the government, the US government, would move from quantitative tightening, where they get rid of their assets on their balance sheet and they sell them back onto the public market, and they go quantitative easing, and they money print and they buy the assets, and they just buy. That's his thesis. That is the TLDR of his thesis. He believes that Raoul's thesis is incorrect, and he's got his own viewpoint there. But now let's have a look at the final person and their thesis, and this is Jason Pizzino. So Jason and his brother Michael, they share a similar view. They're going to disagree on some trades, but they share a view which I also have learned from them, which is the 18.6-year property cycle. I've spoken about it before, but we'll quickly touch on it again. Keep in mind that if you didn't see this was happening definitely in mainstream. Like, there's going to be a recession or blow off top, where it just goes and then destroys everything. In 2023 or 2024, as some analysts were predicting, it is time to focus on the remaining bullish years of the 18.6-year property cycle, which could be this year and a little bit next, or it could be more of next in stocks and potentially also in real estate. But the expectation is in the final 2 years of the winner's curse, which is this year and next year, in real estate particularly, people think they're absolute geniuses. They've bought it and it's gone up in value, and they just think they're doing so well. And then there is a proper collapse. We've covered this in another video, but this is his thesis And this is what he trades on. So what he's looking at right now, and he likes the Fibonacci, in specifically, he likes the 0.5 level, the 50% level. So from this move at the end of or the beginning of November-ish, it's come up and then it's come on down to this low of like 72K. Wow, okay. And then we've hit this high of 109 and we're above 0.5. So we are currently bullish. We are above it, we are bullish. Simple as that. Now let's have a look at the USDT dominance. So this is the total percentage of the actual crypto market cap. The higher it is, it means there's more people out there that are cashing out. They're on the sidelines ready to buy Bitcoin, particularly the exchanges, the whales, the hedge funds, the market makers. When this is high, this is not good. It means our prices are low. When this goes low, we get this nice big run up in our crypto. And it's obvious. And when it starts to retrace, you definitely want to take some profits. Not financial advice, but like you can look at the chart yourself. So you can see this happening here early in 2024. And then here's July. And then you can see it again. It's starting to get weaker a little bit. And then as we come to like December-ish, it goes right on down, really right on down. And this is a perfect time to go and sell some crypto because this was a high, right? And then we got another little bit of a pump in January. This is end of January, February-ish was when Sol did its thing. And then we started to break down and prices would go lower. They came on down and they came to the support level here at 6.24%. And now we are on the right track in terms of the Fibonacci. We want to come back here. We want to come here and we're doing well. So this is another sign that we're bullish in the short term, longer term. Now Solana as well is also doing well. What his viewpoint here is he was bearish because he's just looking at the Fibonacci. So at this point, 2025, as it started to come up, it's above the 0.5, he'll be bullish. And then it starts to break down, comes up again. This wasn't really expected, right? This is the February thing, and this starts to break on down. This is, you've got to be bearish here, bearish. And it breaks this, bearish. Comes on down, breaks, and it rebounds. And at this point, he is bullish because it has reclaimed that 50% level. And that is a big level that he is a fan of. Ethereum, I don't want to make fun of Ethereum. I hold Ethereum, but it is not above the 50% line. It's like trying to get above the 50% line. So this is still neutral. It either falls on down and it loses out because they don't know what they're doing with the value of their token, or it breaks up to the upside. And most likely, I think it's going to break up to the upside just because I think the banana zone is very, very relevant. But you know, at this point, like the Fibonacci level is perfect. It was a perfect time to buy, to be perfectly honest, because it has done a very large run up. But you probably see other outsized returns with Sol and Sui, to be perfectly honest. So here, this is not as clear as other things. The other thing that we can look at as well is the market cap of USDT dominance with when to take profits. And another one that I'm going to look at in terms of profits. So like to sum up, we know Raoul says M2 supply, Bitcoin will follow that. There's a lag of 85 days. We've got a banana zone coming up. Don't F it up. There's going to be pullbacks, but don't leverage it. And you're going to make a whole lot of bang. That's his kind of viewpoint here. He sees it as a very bullish thing. The whole video, the Sui video, the whole presentation talked about how max FUD and fear had been priced in similar to COVID levels when the entire world shut down. I was in Australia. We weren't allowed to leave anything. And now we have the same level of FUD because of the tariffs. And the tariffs are already kind of been lifted and being reworked. So I really do align with Raoul's vision. Ben Cowen made some good points in some ways. I don't really view his fact that he thinks Bitcoin kind of leads M2 supply. I think he's just kind of looking too heavily into the kind of the indicator of M2. Like maybe he hasn't watched enough of Raoul's stuff, or they probably need to have a bit of a debate on it. But he does have the viewpoint that altcoin season probably won't really start to kick off until quantitative easing happens, which would be pretty accurate, and probably not the best time to go and load into all of your favorite lower cap altcoins right now. And he's thinking kind of August, September will be the time when things are going to go crazy. And that kind of indicates to me, like, I'm still going to go and get more SUI, get more Sol, learn more, like, do my best, and try to get others to do their best as well. But like the higher risk plays that are narrative driven, they're probably not going to see that euphoria start until a little bit later. But at the same time, Raoul says, no, that we're already into like phase 2 of the banana zone. But are we? Because the banana zone, it doesn't last for that crazy period of time. So are we? It's a question. Then before I get into my viewpoint here, so I'll tell you also to sum up of Jason's viewpoint. Jason's viewpoint is if USDT dominance decreases, good. If the fib level of 0.5 holds for like Bitcoin, Sol, perfect. We're in an uptrend. We are looking at, we're in the final 2 years of the cycle. More likely the crypto will not go heavily into 2026, but like early 2026 potentially, but who knows? We'll have more data later. We also have to keep in mind that Bitcoin does follow the S&P 500 quite well also. But let's have a look. So what can we do taking away those lessons? Because we don't have like a perfect alignment. Jason's more like, we're currently bullish. Cool. Ben Cowen is like, we're bullish on Bitcoin and maybe some alts, but I don't know what they are. And he's thinking like quite long term. And then Raoul's like, no, we're up, going up. And I think we're going up. And I did a video before I went to Token 2049, or to the events in Token 2049. I said, look, a week before these events, put on a long, a week or so, a week to 10 days after, take off the long. And, that was decently profitable. If you did that, it was decently profitable. But at the same time, Ben Cowen had this thesis, which entered a little bit of doubt. So I didn't go as hard as I should have. And that doubt was relating to like going below the 200-day moving average. So what viewpoints can we actually take away from this? I think this is a very smart viewpoint. This is just the market cap of USDT dominance. The whales, this is still a whale space. And we're just here, we're the shrimp, we're the plankton, and we're just trying to eat whatever scraps we can get. And some of us will do well. Tether, they are big. Binance, they're big. Bybit's big. They had a hack of 1.4 billion and they still recovered like instantly. So what we can do is you can set this up in your trading view. I'm going to make myself disappear. I'll put myself over here for a second. Market cap of USDT dominance. You want to know the percentage of the total crypto cap. And with this, we'll kind of have a look. BTC high or low, like you want to buy your Bitcoin, maybe your favorite altcoins. Like this is all the way back in 2023, when there's so much USDT dominance as a market cap. And then this is when the BTC all-time high hit. First time, March 2024. And this is a perfect time, like you see you're getting closer to this trend line. And this trend line goes back. And when you get close to it, these are your tops. The further you go back, this is obviously there's less money coming into the market. That's why we've got this trend, because there's always going to be more stablecoins being used. The US dollar stablecoin is still going to be like well used. Now we're seeing USDC also take some of the mind share. We've got another chart for that. So right now we're in this trend where we're coming back down here. So maybe it comes like this until August and we take some profits. Maybe, I'm not sure. Like we just have to watch it. But when we get down here is typically a good time. From all the past data, we're looking at this weekly. to take profits. That is essentially the point there. Now, if you have a look at USDT plus USDC, this is a better metric because USDC is more regulated and so more people are using it, institutions and whatnot, even though Tether's still well and truly the big dog. I'll get rid of myself for a second here. You can see down here, when it starts to come on down, like if we get down to like this 5% level, then this is certainly, from the information we've got, right, when the Bitcoin tops are, and then typically the big altcoins, this is a good time to go and sell some. And right now we're trending down, which is a good thing. So I think that alone, take all the information. I hope it's been helpful. It should help with your play in terms of like, what are you doing daily? You find something you're good at. You get good at DeFi, you get good at meme coins, you get good at research and finding conviction plays. Everyone should be using Infinex every single day as an example. It's going to be like massive in the future. You do some new dApps potentially. You get some airdrops. You play on chain. You learn a new skill. You have to lock in, but you don't have to lock into the trenches necessary. But you do need to lock into learning this. And then you do need to take some profits in order to actually pay for your bills in real life. And if you look at the last charts I showed you, they give you a good idea. Put all that together with the banana zone, which is what I'm leading with. Although I do agree with the statements from Ben Cowen and Jason Pizzino, I just have to kind of cherry pick a little bit. But I'm very, very curious. Like, what are your views? Do you think I'm completely wrong? Do you think I'm right? I'm absolutely keen to hear your views. At the end of the day, look, my goal is simple. Try and keep people like learning and know what they're doing, not copy trading or taking one bit of advice from myself or somebody else and just going blindly with it. It's just trying to level up and explain it in a simple way. That is what my goal is. And I think you're going to be bullish on Solana and Sui. If you're bullish on Solana, grab some Sol, stake it with validator.com and make some profits and keep adding to your stake bag. You can always sell your staking bag like as you get to tops or what you think are tops. But I think it's important to have a nice moon bag sitting there. Sui, we don't have a validator, not yet anyway. But same with Sui, like you don't want to degen into everything. Over in Sui, it's more about just DeFi at present, but I do think that's getting a lot of attention, good attention. And there are some other blockchains out there, which I'm pretty damn keen on, like Fogo chain, look into that. Peak, I think Peak's pretty damn cool also. But they're all my viewpoints. I'll be back here with more viewpoints. You let me know what your thoughts are. Thanks for watching. Cheers.